This week the focus has been on the current momentum in the Australian economy, the Australian dollar, and also what's been happening in China. So starting off with the week with the RBA minutes, all we saw there is a fairly constructive view of the outlook, one that's really based on sort of the momentum we had been seeing in 2015 carrying through into 2016. So key there has really been the strength we have seen in the business surveys in the first couple of months of 2016, as well as the momentum we have seen in the labour market, with the unemployment rate now being around 5.7%, which is both meaningfully below 6% and also sort of heading in the right direction in terms of it's marginally trending down. That's obviously sort of quite a positive backdrop for the RBA, and it allows them to be quite expectant in terms of the momentum that might come through from the consumer and also flow through from non-mining investment as well, albeit with a bit of a lag. Obviously, they did talk about the Australian dollar. We have seen quite a significant rise, and that's sort of been obviously a concern in terms of potentially getting in the way of the handoff from growth from mining to non-mining, and particularly in terms of the way that sort of supports gains for the services sector. They did note really that they felt as though for the most part that it had been sort of based, or the appreciation of the Australian dollar had been based on sort of the rise in commodity prices and also the adjustments that have been made to policy settings around the world. Obviously we've seen the ECB ease further, as well as there's expectations around the Bank of Japan providing additional liquidity, as well as in the US we've seen I guess a continual reluctance on the part of market participants to expect further rate hikes from the Fed, and all of that supports the Australian dollar. At the moment, they're not necessarily terribly concerned, I suppose, about sort of what it might mean for growth in the services sector and sort of the broader non-mining economy. Although if we did see a further materialist appreciation from here, that's where they might likely get sort of concerned. Or indeed, if we start to see sort of a deterioration in business surveys and sort of the general activity we are seeing in the services sector, that again would be sort of a concern from them. If we shift across to look at sort of what we're seeing in China at the moment, obviously a big story there is what we're seeing, the appreciation of the iron ore price, and associated with that, the rise, quite rapid rise in steel prices as well. For us, this looks to be more about sort of speculative activity and confidence based off expectations that policy will be supportive for that economy, rather than a real shift in terms of the demand-supply balance for both iron ore and for steel. We note that China house prices across the major 70 cities were released this week. And what we see there is quite strong, robust momentum in the top tier of cities, so cities such as Beijing, where we're seeing sort of growth in house prices over the last year of between 15 and indeed 60%. But across the other sort of major cities in Tier 2 and Tier 3, which is actually where most of the construction activity takes place, we haven't seen anywhere near those gains, with sort of more like sort of 1 to 4%. And that really emphasises that although we are seeing, I guess, quite a strong demand in certain areas of China, it's not broad-based, and on that basis it's not likely to lead to particularly sustained increase in demand for steel, and therefore also a come through for iron ore prices as well. So overall, it's, I guess, a situation where we're likely to see the commodity prices ease back considerably, and that should actually lead to a further weakness in the Australian dollar as we move through 2016. If we look forward to next week, it's a much busier week. We have the FOMC meeting in the US. There's unlikely to be anything, I guess, particularly changed there. They will continue to note sort of the risk to the global backdrop, although they're likely to potentially moderate that a little bit given the rise we have seen in equity prices and, as I mentioned, commodity prices coming back. Though for them, the focus really remains on the real economy, and so they're waiting to see, I guess, a bit more momentum come through as we move into Q2 before they start to think about raising rates, which we continue to expect the next hike coming in June. Back at home, the focus is really going to be on the CPI. So this is obviously still a very key release, although inflationary pressures are fairly modest. We're looking for a 0.4% gain for the headline measure and about a 0.6% for the core. That should leave both annual rates around about 2%. Which is really at the bottom of the RBA's target range of 2 to 3%. So that's highlighting that inflation is not a concern on the policy front and allows the RBA to remain very accommodative in terms of its stance. But it does also emphasise that they need to be watchful in terms of whether they do need to provide further accommodation to the economy, and hence they'll remain with their easing bias. In terms of I guess the detail of the CPI, what we'll be looking out for in particular is sort of whether we do see an Australian dollar impact, and also what sort of pressures we're seeing coming through housing. So we have seen those outcomes be a little bit weaker than we might have expected in recent times. And it'll be interesting to see whether we get a bit of a bounce back as we move into 2016. Sort of momentum in the housing market obviously is quite strong, although rents are still sort of remaining at a much more modest pace of growth. So that's going to be one of the tensions we'll be looking for. So we'll come next week and wrap that up for you.